The Bible says, be not deceived. Whatsoever a man soweth, that shall he also reap.
All right, it's 4 p.m. on Wall Street. Do you know where your money is?
How much should I invest?
I'm really looking for some direction.
Should I hold on to my house as an investment for my future?
What should we do to have money that we're putting aside?
Welcome to Financial Issues, where we align reality with truth. Conservative talk radio you can count on. Financial issues that you need to know.
We face a disintegrating economy, a weakened defense, and an energy policy based on the sharing of scarcity. We will simply apply to government the common sense that we all use in our daily lives.
Now, here's your host, Dan Celia.
Good morning. Welcome back to Financial Issues. It's great to be here. We've got a lot of economic data coming out this week. A lot of things happening over the weekend. We'll talk a little bit about that. I'm going to give you some recap, at least talk about what the economic data is that is coming out. I have had an unusual amount of time this weekend to be able to look at some of the economic data. Again, I'm still doing this on 2015, and I'm going to be talking a lot about that probably towards the end of the week. Particularly to my partners. I would expect that all of you that partner with the ministry, and if you don't partner, I sure hope that you'll do that early this year, because it is what supports us and what keeps us going, and we sure would appreciate you coming alongside us. There hasn't been a better time to partner. We are looking at the end of first quarter probably increasing our annual ask for our partnership. I'm not certain about when that might be, but nonetheless, once you're in, you're locked in. We have people paying the very original rate from years and years ago, still doing that every year. So once you're in, we lock you in at that particular rate for your lifetime. So anyway, we sure would appreciate that if you partner with the ministry at financialissues.org. It's what keeps us on the air. But aside from that, I just want to say, and I will be alerting some of the partners over the next couple of weeks. So you may get some very specific alerts, and I'm going to ask you, please read them carefully, make every effort to understand them. I am getting inundated with emails, record number of emails. We had a spell like this about 2 years ago. I don't remember the circumstances, but we're getting inundated again. I am not getting to all of them, and unfortunately, I'm not getting to read them. We're trying to filter them out, but, we're getting thousands of emails, every week. I mean, I think we're averaging probably, I don't know what we're averaging now, but we're getting about 1,400 or 1,500 emails a day after everything is filtered out. So needless to say, I'm just giving you a heads up, and I hate to be like this, and I hate to say it. I'm not getting to all of them. I'm getting to very few of them. Some of the ones that I happen to see that are very, very short, like one sentence, I try to answer back as quickly as I can, but it's very, very difficult. So just to give you a heads up, I'm getting inundated with email. So you're going to have to pay attention. I will do my best. I'm not good at it. I don't deny it, but I will do my best at clarifying and making my alerts as clear as possible so that you understand it, to eliminate those potential email questions that you might have about it. But you need to pay attention. You need to listen to those. I would suggest to you that over the next couple months, that it's important to everybody out there listening that you would podcast, listen to every program. Maybe you have a walking routine every day. Maybe you have a workout routine. Maybe you have a downtime, maybe a long commute or something like that. It would be a really good idea to download. I think it automatically downloads the podcast every day, so you can listen to it the next day. So if you can do that, it would be. I would strongly suggest you doing that so you can fill in. And the thing about it, if you want to fast forward through some of the questions, maybe you want a podcast and just listen to my commentary throughout the program, then that would be wise. So I would, and you can do that at afr.net. You can do that at Financial Issues with Dan Celia. If you search that in iTunes, you'll be able to come up and find it. It doesn't cost anything, by the way. We think of iTunes as having a 99-cent cost or something. It doesn't cost anything. You might be able to do that. A best place to do that might be iTunes as well. So And you have to search Financial Issues with Dan Celia, and I'll take you right to the iTunes page. Anyway, so I would suggest you doing that. A lot of economic data coming out this week that we've got to be cautious about. A lot happening over in Europe. A lot more happening than even the news indicates from what I can see and listening to and reading some of the international news. But Wednesday, it really kicks off Wednesday with retail sales numbers. Retail sales numbers come out. Now, when you look at the retail sales number, it's looking like it is expected to be a negative 0.2%. All that talk about 4.5% retail sales numbers for the month of December, not looking so hot right now. It's looking like a negative 2% or negative 0.2%. When you strip out autos, it's looking like it's going to be flat, nothing, 0% for retail sales numbers. So that's something we ought to be concerned about. Business inventory numbers also coming out on Wednesday. That's expected to be up 0.4%. That's a GDP number. That's a number that is probably going to impact GDP for the fourth quarter. And this is November's business inventories numbers that we're getting. The other thing that we may be hearing about, traders waiting and watching and trying to wait and see what happens with the Fed's beige book numbers for the manufacturing sector and the general economy in each Fed's business area. That's coming out at 2 o'clock on Wednesday. You know what I say? Read December's. You want to know what the deal is for January? Read December's, because it's not going to change. It's pretty much going to be the same thing. If it does change, it's going to change on the negative side, in my opinion. Also, we'll be getting, of course, initial claims coming out on Thursday. PPI, Producer Price Index. Producer Price Index right now is expected to be a negative 0.5%, a negative 0.5%. That's what it's expected to be. Now, when you strip out energy, of course, it's a plus, because a negative number there being the energy side of things for producers, costing them less to produce. So we're looking at a 0.5%. Now, on the back of that, Friday, we get CPI, Consumer Price Index, and that too is also looking like it's going to be a negative number. This is not good. It's got to have the Fed stressing out big time. I'll talk about that in a minute. Industrial production numbers come out. That's also expected to be a negative number, down 0.2%. Michigan sentiment number, that's expected to be up, but that's the first look for the month of January. So we'll take a look and see what that's going to be. That also coming out on Friday. By the way, we are going to get to calls here right after this first break. 866-300-9298. 866-300-9298. And you are listening to Financial Issues. I'm Dan Celia. It's great to be here. So check that out. We'll see what things are going to be looking like. But call up if you got a question. Now is the time, folks. You're going to do far better asking me a question on the air than you are going to be trying to get me to answer a question through email. So give us a call, 866-300-9298. All our lines are open. If you call in right now, you're going to be the first one we take after the break. Listen, Consumer Price Index, industrial production, very, very important numbers when it comes to the Fed, and the Federal Reserve's got to be looking at these numbers very, very closely. We just heard one of the federal Fed presidents out of Chicago, Evans, talking about, listen, inflation. We got to shoot harder for that 2% target of inflation. This is not helping things. This is dropping things down. The problem with the Fed, the reason why they stress out over this is they got to have inflation. We don't have adequate GDP growth to keep pace with our debt. If we don't add inflation to that, we're not going to be able to do it. It's all smoke and mirrors, no matter how you shake it right now. But nonetheless, it's going to precipitate a crash coming a little bit sooner if we don't start getting some inflation. So we're going to start seeing that trend line of debt to GDP ratio begin to increase. And that in and of itself is going to cause some anxiousness in the markets. The Fed is doing its best to do false positives, more deception, more smoke and mirrors. Between the Fed and the Treasury, they continue to do that. I heard something, did a little research yesterday about who is doing who's buying our debt. And when I looked into it, so I'm sitting watching football, got my laptop on my computer, and I'm sifting through some research at the same time I'm watching the game. And of course, what comes up is we have a new buyer, and that's Belgium. But when you look at the amount of debt that Belgium is buying, it's a lie. I was trying to think of a better way to say it. It's a lie. It's got to be a lie. Can't be happening. It's a lie. I don't know who Belgium is fronting for, but it isn't accurate. Belgium's no way buying that kind of debt. So we're watching China drop off, we're watching Japan drop off, and Belgium pick up the slack? I don't think so. So either it is stealth, and I talked about this years ago, that there will always be a quantitative easing or a buying of our debt by the Fed. There will always be that. It may be stealth. We might not see it, but I think we may be finding it somewhere in Belgium. Just throwing that out there. Another issue to be concerned about. If you partner with me on the website, you notice one thing today, very short buy list. Very short buy list. It's getting about as short as it's been since December of 2008. I am not going to be a buyer, and I am not going to recommend too many as buyers for this first quarter. And I'll be talking more about that this week. So CPI, Consumer Price Index numbers, Friday, going to be very important. We're going to have to watch that. It's going to look like we are getting a bump down in inflation for the start of the year. Actually, it's a December number. So it's not for the start of the year, but as we finish up last year, it's going to show a lower number. So I'm not trying to be a conspiracy theorist here at all, but I will say this. I would expect if we see a dramatic decrease in CPI and we start to see a dramatic decrease in inflation, I would suspect to you that the final read at some point in time, once we start getting inflation numbers this month, which we're going to get before the final read on GDP for the fourth quarter, I would suspect that miraculously the fourth quarter GDP number is going to look a lot better if we keep seeing inflation going down, because I think there's going to be more cooking of the books. I'm just saying, because it's got to be they're reaching the point of desperation. And we've got to be extremely careful about what we do. The key word, I talked about this last week, the key thing is going to be hard assets. 2015 is going to all be about hard assets. Are there some sectors during the crisis that are going to thrive? Yes, I'll talk about that in the upcoming weeks. There has not been a more important time, in my opinion, since the Great Depression. And by the way, yes, I'm old, but I wasn't on the air during the Great Depression. But there's never been a more important time since to listen to financial issues, to listen to the truth, to listen to the reading of between the lines of the data than there's ever been than in 2015. Make no mistake about it. And I said this last year because it was true. I said there has never been a better time to partner with the ministry than 2014. I said that last year. I said it all year last year. Well, guess what? That was until we got to this point of 2015. So I just throw that out there, that if you're not a partner, if you've been thinking about being a partner, this is the time to do it. Listen, a lot of people asking me tax questions. I want to mention this about the tax change. Number one is we're still ferreting out all the tax changes. In the first week or two of February, when people are starting to think about doing their taxes, everybody's waiting for their W-2s, everybody's waiting for their 1099 forms. So I know that it's first week of February, second week of February before we start getting organized, get ready to do that. I'm going to talk about some of the tax changes for 2015. It's not going to affect, obviously, you doing your taxes for last year, but I'm going to talk about that in the first couple weeks of February. 866-300-9298. We are going to get to phones. 866-300-9298. You're listening to Financial Issues. I'm Dan Celia, American Family Radio Network. We'll be right back.
Hi, this is Dan Celia. We talk all the time about investment strategies and planning on a regular basis, take an awful lot of phone calls. But I do know that some of you may have some pretty complex situations. When it comes to your wills, a power of attorney, a trust, a living trust, some other complicated estate plans, tax planning, you may need just another opinion on how to deal with that. Well, I hope you'll call the AFA Foundation. The AFA Foundation stands ready to help you in any way that we can. Maybe you'd like to sit down with me or someone else if your situation warrants it, and we'd be happy to do that. Give us a call at 800-326-4543, extension 345. 800-326-4543, extension 345.
Good morning. Welcome back to Financial Issues. I'm Dan Celia. It's great to be here. 866-300-9298. We are going to get to your phone calls. U.S. stock futures looking pretty good right now. Anyway, rough day last week. Friday to close the week. 866-300-9298. The big question is the euro currency, the Eurozone, and, of course, what's happening. France just barely staying out of recession. France up GDP 0.1%, but contracting all the way around. France obviously being one of the largest economies in the Eurozone, something that is of concern. Speaking of France, of course, you saw maybe on Twitter or Facebook the article that I sent out. It's hard to believe that when you look at everybody that was there showing solidarity for France yesterday, Netanyahu, Angela Merkel, the president of France, obviously, world leaders, the real leaders of the world coming together in France over the weekend. No President Obama, no Joe Biden, no Kerry, no Eric Holder. No, nothing. Some representative for the ambassador was who we had. Absolutely pathetic. I mean, we don't want to cut into the president's tea time, but pathetic. Anyway, let's go to the phones. Let me go to Brett in Tennessee. Hey, Brett.
Hey, Dave. Hey, I just had a real quick question. My wife and I are in our mid-50s. I left a job not long ago working for a municipality, and took that money and put it into we had also a 457 through a company. And right now it's sitting in a, you call a holding pattern, waiting for me to decide where to put it. We're debt-free with the exception of our mortgages. And I've got about $30,000 sitting in a mutual fund through the local credit union as an emergency fund. I guess what I'm wanting to know is I want to be, I've recently run a Clarkshire program and I want to be biblically responsible with my investing and things. And I've heard you talk about Timothy funds. I want to, should I transfer that money from that 457 into the Timothy funds, and what should I do with that emergency fund in order to keep it at least liquid but try to gain some income off of it?
Well, here's the thing. If you try to gain some income from it, then it's not going to be totally liquid. And I don't mean liquid as in the sense that you can't get to it, okay? You will be able to, and if you need money tomorrow, you can sell some of the mutual fund and you can, turn that to cash. You can get some money. So I'm not talking about liquidity from that standpoint. What I'm talking about, though, is risk of market downturn. So I don't know what kind of mutual fund that's in, but if it's in a mutual fund at all that is exposed to the market, then I don't believe that ought to be where your emergency funds are. I think your emergency funds need to be in the bank in a savings account or a money market account at best. And that's it, because what you don't want to have, if we have a major crisis, not if, but when we have this major downturn in this crisis, when we have that, It could impact one of your jobs or your job, income, in some way, shape, or form. There could be some other issues that you might need to take care of. At the very same time, the market's tanked, so your $30,000 now is worth $15,000. If you know, and at the very same time, you have to withdraw it. So I would just caution you, Brett, is that I wouldn't be concerned, not now, maybe 6 months from now, but not now. I wouldn't be concerned with trying to make a little bit of money on that. I mean, you know, other than the little bit, if you can even call it, that you're going to make from a money market account. But I don't want to see any of that at risk of the market, not the emergency fund. So I think that would be wise. The other part, the 457 plan, yes. I mean, I think that if you want to be biblically responsible, I think that you got to move over to Timothy. And you want to stay in mutual funds. But I would say this to you, even over Timothy, other than maybe the Israel fund, I don't know that I would be too quick to invest. Now, if you mention the Israel fund that you want to bring it over, you want to open up an IRA account, you want to bring all this money over, that you want most of it going in the money market account for the time being. They don't show the money market account as a part of their funds, but they will put it in a money market account for you, all except for maybe the 10% or so you're putting in the Israel fund. But other than that, I would still stay on the sidelines, Brett. I'm very concerned, and I get more concerned the more research I do, that you know, I am really concerned about the sustainability, and I think that we've got to at best wait, even if you're young, at best wait until the end of this quarter. Now, you know, the normal course of thinking is going to be, well, you're a young guy, you know, you're out of debt, you're in good shape. Don't worry about it. Don't try to time the market. Don't just get in. Just get in the market, and, you know, you're going to be in there for 30 years. You're going to be fine. Well, here's the thing, and I don't disagree with that. You'll be fine. But I'd rather you be a little bit better off and jumpstart your entering in when the market is down. I would like you not to start off at a place where you're going now, in some cases at all-time highs or close to it, and see a 50 to 60% adjustment downward, and now you're starting from there for this next 30 years. So all I'm saying is it's not going to hurt anything to wait at least until the end of the quarter. Let's see how these politicians work out. I hate to say that I have to depend upon what politicians are doing, but I think we do at this point. And let's see how things shake out. So I like the idea. I'm okay with moving the 457. Get your 401k, get your IRN established over at Timothy. I'm okay with doing that. But even establishing that, with the exception, again, of the Israel fund, I would say stay on the sidelines in their money market account. All right.
Okay. Well, thank you very much. I appreciate that.
All right, Brett. Thank you for the call. I appreciate it. Let me go to Herman. Herman calling us from Oklahoma. Hey, Herman, how are you?
Fine, sir. Thank you very much. I'd like to ask you about the Vanguard PIPS fund and the money market accounts in short-term treasuries.
Yes.
Yes, but there is a capital gains tax associated either with the fund or a money market account. And I can barely hear you. Can I take you off there or your answer off there?
You sure can. Go ahead, Herman. So here's the thing, Herman. There's no so it depends. If it's in an IRA account, then, of course, all you're worried about is any withdrawal you take is going to be income to you. So there is no capital gains. There's not going to be anything like that. In a money market account, it's interest income. So you're going to look at interest income, and that's it. So if you're in a money market account and you're earning interest, whatever that interest is, that's going to be counted to you when at the end of the year when Vanguard sends you your 1099 form, you're going to see that under interest and dividend income. Same thing with other dividends. The capital gain on a mutual fund is generally paid. You get a 1099 at the end of the year on those mutual funds, or in your general statement from your broker, and all of that's going to be calculated in there for the most part, and you'll pay that kind of as you go. But As far as income, as far as interest and dividend goes, you'll also pay that and get 1099 for that at the end of each year. So that's kind of how that's going to work. And I wouldn't be concerned about that either, Herman. If you're in a situation where you're drawing this income or you need this income, you're staying relatively conservative, I think you're far better off staying conservative, staying somewhat on the sidelines, earning a little bit as far as dividends and interest, and not worrying about the taxes. You got to pay taxes, you pay the taxes, and move on. I think that we can't. Sometimes what happens, not sometimes, oftentimes, what happens, we get consumed with paying taxes. I don't want to pay any taxes. And so what we do is we end up doing some things that aren't the best thing for the portfolio, and we end up with more risk in our portfolio than we ought to have, which ends up hurting us in the long run during a downturn. So just hang in there, be careful, and but that's how it ought to work out for you. Let me go to Jim. Jim calling us from Virginia. By the way, 866-300-9298. We've got two lines open, 866-300-9298. Hey, Jim.
Hey, Jan. I love your show, and I credit you with teaching me almost everything I know about this type of thing.
Thank you.
But I'm not sure what the difference is between inflation. I don't know what inflation or deflation is. And if you could tell me what deflation and the inflation is and the relationship between the GDP and inflation.
Okay, good, great. Here's the difference, first of all, of inflation and deflation. Inflation, of course, is prices rising. We would look at gasoline right now and say that we are in a deflationary period of gasoline. Now, on the surface, Jim, it looks pretty good. Well, I like that. And deflation generally across the market, this is what's happening in Europe, it's a huge problem, indicates a very weak economy. What happens is if you sell some sort of product, or if you're in the construction contracting business, or you are a service company in some way, shape, or form, in an economy that is struggling, nobody is buying your products or using your services. And the only way that you can survive, and this goes for large corporations as well as, small sole proprietorships, it gets to the point where the only way you survive is by lowering your prices. So you end up doing things for practically nothing so that you can survive and that people will buy or use your services. That's what happens during deflation. So when we see deflation, it generally means that the underlying economy is bad and people aren't buying anything, so prices continue to get lowered to a point to try to encourage people to buy so that businesses can stay afloat. And that's a little bit, it seems a little simplistic, but it's really not a whole lot more complicated than that. So that's deflation. Inflation, of course, is the opposite of that. Economy is doing better. Prices are going up. Now, sometimes inflation can happen during a period of poor economic times, because what can happen is there's a destabilization. Maybe something's going on in the economy. We can have inflation in oil prices, for instance, as a result of a war or a geopolitical event, which can drive the prices to truckers up, which drive the prices of food up, getting to the market, which drive the energy, driving the prices of a lot of construction materials that are energy dependent, siding, shingles, insulation, that they use an enormous amount of energy to make those products, drives those prices up. And it trickles through the economy. That's called, that's inflation. So that doesn't always have to show a good economy. That can also show a struggling economy in one particular area that we're seeing inflation kind of get out of hand and out of control. So that's inflation is driving prices up. So inflation is a good thing in small portions. Inflation, a little bit of inflation is good because it helps companies make more money. If companies make more money, they hire more people. That's good for the economy. When they hire more people, it lowers the amount of people looking for a job, which means we start to see wage growth. So a little bit of inflation usually means, hey, this is a good, stable economy, things plugging along, and we're having some inflation. That's good. That lifts all boats, so to speak. So that's a good thing. Inflation is absolutely necessary, especially right now, because we have so much debt that it is critical that we have some inflation. What happened during the Jimmy Carter years was Paul Volcker said we got to have inflation to generate some GDP growth, not because it was generating activity in the economy, but because the things that were in GDP were valued at a higher rate because of inflation. So it takes a $14 trillion GDP and makes it $14.5 trillion with a little bit of inflation. When that happens, it lowers the ratio of debt against that GDP. That's a good thing. So GDP growth with inflation is critical for us because we have so much debt. And the Fed will work to raise inflation since they can't get GDP growth. Now, in July of 2013, the Fed did something that they haven't done in 60 years. They said, well, we can't get growth up. Let's change the way we calculate GDP. And we now have added things to be counted as GDP that we're the only country in the world that uses these things. And we've added these things in for more deception, smoke and mirrors. Let's appear as though GDP is raising. It isn't. Nobody talks about that calculation. I'm the only one that talks about it on a regular basis, which is even more irritating. So we've got a new way of calculating GDP, which is very beneficial to GDP, but it's not truly productivity growth in America. More smoke and mirrors, more deception, more false positive. Hope that answers your questions, Jim. Good stuff. 866-300-9298. Financial Issues. I'm Dan Celia. We'll be right back.
Hi, this is Dan Celia. You know, it is difficult in these volatile times to think about how am I going to manage my money? Can I manage my money? Do I have to put my trust and faith in someone else and then expect them to be biblically responsible in their management strategies? I think all of you have had those questions and concerns. Well, I can put you at some ease and tell you that if you come alongside Financial Issues and partner with us for $85 a year, I will help you with all those things. We're going to give you stock picks every Monday. I'm going to put you on an alert system that'll tell you when to buy or sell or hold or give you comfort. You'll get asset allocation models, investment strategies. You'll have access to our conference call that we do every month with our partners, all for $85 a year. I guarantee it'll be the best investment you ever make. Go to financialissues.org, financialissues.org to support the ministry. I sure would appreciate it.
The opinions and recommendations expressed by Dan are his own and do not necessarily represent the opinions of this station or any of the show's sponsors.
Welcome back, Financial Issues. I'm Dan Celia, American Family Radio Network. Got a lot of email. I'm getting a lot of emails over. You know, it's great. I'm really excited about it. So many people thinking about switching over to this health sharing ministries like my wife and I did. You know, who do I recommend? Listen, I only endorse Samaritan Ministries. Just to be clear, Samaritan Ministries is who I was able to vet out and vet clear. Somebody sent me an email saying, well, they only cover $250,000. That is not the case at all. Get your package, research it. They have never once, I believe they're the only one out there that has never once had any kind of dispute on any claim. in their history, and they're either the oldest or certainly one of the oldest. I think they're the oldest. I think they're the ones that kind of started it all. But I've been out there. I've gone through everything with them. I've not gotten anybody else to even return my phone call. But and that's why I personally went with Samaritans after seeing all the getting out there to their offices and to their complex. It's incredible what they're doing. As a partner with Samaritans Ministries now, my wife and I got our first share notice this month. It's our very first one, and it was reduced for the 5th month in a row. So what we were told our share was going to be every month, it wasn't even close to that, because what's happening is they've got far more people sharing than they have medical expenses coming in. So they pass that along to everybody. So the share was dramatically reduced, like $200 reduced for this month. So pretty amazing company, pretty amazing system. SamaritanMinistry.org, by the way. Samaritans, not Samaritans, it's no S. SamaritanMinistries.org. And sure hope you'll check that out and join my wife and I getting back to the book of Acts. 866-300-9298. Let me go to Gina. Gina calling us from Texas. Hi, Gina.
Good morning, Dan. This is Gina from Cowboy Land right now. Let me say to you that I'm one of your partners.
Thank you.
And I want to tell your audience that you have been one of the best investments I've ever made.
Thank you, Gina,
for that.
I just
started learning about stocks and bonds and investing. My question to you this morning is, I've been reading an article about all of the unbanked people that we have in the United States. And I'd like for you to comment on that, because I was reading about a company called Green Dot Corporation that services all of our unbanked people. I'm going to hang up and let you comment on it.
Great.
It's okay.
Yes. Thank you, Gina. We're going from the most overbanked country in the world to maybe one of the biggest unbanked people in the world. And that statistic is growing every year. People that are stepping away from banks. There is a fear in banks, as to a certain extent, there certainly should be. But there is a fear, and people out there looking for the alternative banking systems. Now, I can't speak to the alternative banking systems. There's more than one, but because I haven't vetted them out yet. I really have not had the time. I have them on my radar screen for sure, but I have not really sat with them and all the information that they would probably, I hope, be willing to give me, and really kind of go through a process in order to speak about either one of them in a way that might sound like I would endorse it. I would like to know personally for myself and get more of that information. But I think that is going to be a trend, particularly this year. I think it's going to be higher this year than it was last year, of people saying, I got to come up with a different solution. When we think of financial companies like credit cards, of course, it gets easier and easier to step away from banks and things like PayPal and such. And I think that's exactly what is happening. People are saying, well, I got a PayPal account, I got a couple credit cards, and I'm stepping away, and they're not bank credit cards. So I think it's something that I'm just going to be watching very closely. I think we're going to see more and more people doing this again in 2015. It's not a concern of mine. The only concern of mine is that scams are going to be popping up all over the place as this continues to grow, this trend to get away from banks. And we better be extremely cautious. When the scams all start popping up, the very first demographic that the scammers are going to go off of after are who? Yes, if you said senior citizens. So the best thing that you can do out there if you're a senior citizen is don't talk to anybody. If you don't talk to anybody, you won't be talked into anything. So the best thing you can do is just avoid it altogether. Keep listening to the program until we get to the point where we have gone through some of that research. You're welcome. I don't know when I'll get to it or if I'll get to it, but you're welcome if you know of some of these banking alternatives out there that I might not know of. I know about 4 of them. You're welcome to send them to me to get on my list to check out, and I'm happy to do that. Let me go to Rob in Tennessee. Hey, Rob.
Hey, Dan. I'm 28 years old, and I just finally got a stable job. I have about $2,000 in the bank, and I have several thousands in student loans. And so I'm very cautious about where the market is going. And after listening to you on the air, I'm getting married in 2015, and I just bought a house. And so I want to protect my family from the unstable market. So my question to you would be what you would suggest for somebody in a similar circumstance like mine to protect themselves and their family with limited income and not too much in the bank so far, what you would do if you were in that situation. So I'm going to hang up.
Okay, great. Thanks, Rob. Great question. Rob, here's what I would like to see you do. First of all, don't think too much about investing. That shouldn't be on your radar screen right now. You're doing a good job. You've got a couple $1,000s saved. I would continue to push along those lines. For the next few years, as you get married, maybe you have a combined income. Maybe your wife, until you have children, is going to work or going to continue to work. You have a combined income. Hopefully, there's not a whole lot of combined debt. And you can begin to create a little bit of discretionary income between the two of your incomes, and you can work hard on the debt. I mean, with that discretionary income. One of the things that you need to do, one of the best ways you can protect yourself is have as little debt as possible. You get a huge head start on a lot of other people your age in that your debt is pretty typically a mortgage and your student loan. So, I would peck away at that student loan. Don't defer it ever. Keep paying on a little bit on the principal, even if it's $20. Continue to peck away at that and get that taken care of. So the best thing you can do is try to save half your discretionary income. Try to put some of it towards that debt. And I think that's the best thing you can do. I know we all get anxious and we start thinking, well, I've got to invest and I've got to start getting into the market and those kinds of things. Probably if this were 2003 or 4, that's exactly what I'd probably tell you to do. But we're in a new day today, and I don't feel comfortable saying that. I do feel comfortable telling you, hey, just keep saving, not in some sort of investment product from the bank, savings account, regular old earn nothing savings account that's totally liquid. And I would even suggest to you, as I would suggest to everybody, that you have some cash at home. I think it's critically important that you have some cash at home. And I think that's important to make sure that we all do that. I've got some interesting aspects coming along in the next few weeks in reference to some of that cash at home. One of them is going to surprise everybody about what kind of cash you might want to have at home. But nonetheless, I would definitely have some cash at home. Let me go to Charles. Charles calling us from North Carolina. Hey, Charles.
Hey, Dan. Hey, a few months back, you mentioned about tithing on our businesses.
Yes.
And I have a job that my wife and I both have jobs we pull salary from. And also on my business, she will receive a small salary, and we tithe from that as well. But I thought you mentioned that we also should tithe from the gross of our business. And I started doing that, and I just want to make sure that's exactly what you meant.
Yeah, it is. So what I meant was if you have income, which you obviously do, you have income into your business, and you have income of $1,000 this month coming into the business, even though you're not receiving it. But as the owners, you and your wife, as owners of that business, I believe you ought to tithe on that business. And I can tell you, I sit on 2 corporate boards, privately held corporate boards. One of them is a Christian management and ownership organization. One is not. But I can tell you that from all the businesses that I've ever sat and spoke with that are tithing and honoring God and all that they do, it is a world of difference in what is happening. So you did hear me correctly, Charles, and man, that is awesome. I'm so glad you're going to do that. You're never going to regret doing that. So that is exactly what I meant. Thank you, Charles. I appreciate you calling and asking that question because that is of benefit to everybody. Let me go to Jane in Mississippi. Hey, Jane.
Good morning. Thank you for your ministry.
Sure.
I have a question.
Okay.
In our emergency savings account, we have $15,000. We just kept on saving,
Mm-hmm.
and we wanted to put it in maybe the best savings account, a bank that has the best interest, that we could take it out when we need it, or maybe a money market account.
Mm-hmm.
We can take it out at least once a month if we need it, but I didn't know the best option.
Well, I mean, so you have it now in this money market account?
I have it in the savings account now.
In a savings account. Yeah, I mean, I think that is right now, Jane. How are you guys retired or ready to retire or far from it? Where are you?
No, far from it. My husband's about 40. So.
Yeah, so I would definitely want to see you, Jane, invest some of that at some point in time. Maybe open an IRA account or something, or increase what he is contributing to work. If he's contributing to a 401k, I'm going to definitely want to see you do that at some point in time. I'm not real anxious to tell you to do that now. I kind of like what you're doing. Just leave it sit tight. Yes, you're on the sidelines. Yes, you're earning nothing. If we continue to have negative inflation and negative CPI, then actually in reality you're earning more than you think because the purchasing power of that money is increasing. But I would just leave it sit. I think, and I've been saying this to everyone, I think we've got to wait and see what happens at the end of this first quarter. And I guess the thing that I'm looking for the most, so hopefully that helps you, Jane. I would just sit tight and just keep saving as opposed to investing. Let's wait until the end of March and then kind of call me again and let's talk about that again. But what I was going to say, I think that I unfortunately I'm waiting to see what happens in Washington. I want to see if there are any bills put forth by this new Congress that are going to be bills that are going to help the economy, that are going to address the debt of this nation, that are going to encourage GDP growth, that are going to address all of the current issues that we ought to be concerned about. And I want to see if this Congress is going to do anything. Now, even if the president vetoes everything that goes before him, that's one thing. But I want to see what Congress is doing. Then I want to see if Congress is doing it only so they can look good politically, knowing that the president's going to veto it. But are we going to put tax reform before the president by the end of this quarter? And some are saying no. Back in early December, everybody was saying definitely this first quarter. Now everybody seems to be saying no. I want to see if those kinds of things happen, because what that's going to tell us is that this mess that we're in is not going to see any real improvement. And then I'm going to have to assess whether the mess that we're in is going to be sustainable for an extended period of time and make some decisions based on that. So again, I think the first quarter is critical to what we do. And it's critical because unfortunately, I'm going to be looking at the markets based on what politicians are doing. You have no idea how that gets under my skin that I'm doing that. But unfortunately, we have reached a place where we have little choice but to actually consider that, think about that. So that's disturbing. But anyway, that's what we're going to be looking at. I think the next couple of weeks are going to be very interesting in the market as we see earnings shake out, and that'll give us some indications as well. You've been listening to Financial Issues. I'm Dan Celia. We're here every day at this time, and we sure appreciate all of you that are with us. Stay with us through the news. Folks, we're here again every day trying to help you be the best steward you can be with all God has given you.